Good morning, good afternoon, good evening, folks. It is Wednesday. That means, of course, we got Matt, the mortgage guy. How you doing, buddy?
I'm doing great, Mike.
So let's just tell the audience you're actually not at home. You're out. You're out in Vegas. Your wife is playing the World Series of Poker tournament. How about that, huh?
True story. Yeah, wife's downstairs playing the main event of the World Series, and I couldn't miss a Wednesday with my buddy Mike. So I said, I'll have my laptop and be working from the room.
Let's go.
Jump on.
There you go. There you go. Well, thank you for doing this. I appreciate you giving us time. I'm sure you have seen the complete decimation of the 10-year note. Seems like 2 weeks ago it was trading at 3.49. I haven't looked in the last 10 minutes, but I think it was actually a little bit up today. I think it's at 2.91. And we have yield curve inversion. So what the hell does this mean for the mortgage market?
Right. Which you'd think in general you can say that the 10-year and the 30-year fixed kind of track on each other, and you'd expect more of a pullback in rates, which truth be told, we have got a pullback. Like Mortgage News Daily that just tracks the national average. That was above 6. Now it's in the 5-6 range. On the broker side, where we have a little bit of margin compression going on, we've got, truth be told, I think, companies getting really thin in an attempt to drive some of the competition out of the business. Consolidations happening. I locked one yesterday at 5.1 with no points.
So was it a purchase homeowner, I'm guessing?
Yeah, a purchase with great credit and a large down payment. And so like,
was it a jumbo?
No, it was a conventional conforming loan. Yeah.
Wow.
And so rates on the right scenarios in the low 5s with no points. You could pay a point or get a point in credit and be in the high 4s, which is good for consumers. Sure. I don't know what it necessarily spells for the economy and all the other parts of it, right? But as far as mortgage rates are concerned, it does have an effect on mortgage rates and pulls mortgage rates down. So in the short term, at least, that's good news for consumers and home buyers.
Yeah, I think we have a CPI out next Friday with the Fed meeting the week after. We got Fed meeting minutes today, and I actually had some notes. Basically, the Fed is saying they know they have to get more or potentially have to get more restrictive. And again, in case people don't know what that means, they kind of estimate this base rate at 2.5 or neutral rate, I guess. So they're saying they may have to go higher than that. And there's a lot of talk. Is it 50? Is it 75? I just talked to a Wall Street guy, and he's telling me that there's a increasing bet that it will only be 50 in July and maybe even 25, which I can't fathom. But Wall Street clearly believes the Fed is wrong or lying, one or the other, because they see a recession coming. You don't get yield curve inversion where 2% money is more expensive than 10% money in a normal economy, right? I can borrow money for 10 years for cheaper than 2 years. How can that be possible?
Right. Yeah. And, you mentioned that CPI number. Like, I've still got heart palpitations from the reading that kind of caused mortgage rates to go crazy. I think the day was June 17th. And
8-6.
That day is like ingrained in my memory, because between that Friday and the following Monday, we lost 0.5% in mortgage rate, not 50 basis points in cost, in actual rate. And so, this is a common question. It'll be a good thing to clear up for folks. Folks always ask, hey, there's a Fed meeting coming up, or this is happening. Are rates going to do this or that? Rates change every single day. Rates change on news. Rates change on Powell and other members of the Fed, what they say, how they say it, all these other factors, right? So it's not like rates are the same from now until we have a Fed meeting, and then the Fed meeting comes out and then they get adjusted. Every single day they adjust. And so, consumers that are rate sensitive, most of them shouldn't be, but they're going to be anyway. So I might as well say it. Know that they change every single day. Inflation data, CPI data, is something that for sure is going to have an effect. And then how the Fed reacts and how they talk and what their future plans are is all going into this soup.
Yeah. So a couple of things I want to ask about this. You brought this to us seemingly a year ago, and it's probably been no truer than today. If you like it, lock it, right? You've gotten some rate betterment over the last week or so. If you like it, lock it. If you can, if you can, do it, right? Does that make sense?
Oh, 100%. And that, I mean, we still, like, every day in our business, we do that, right? Like, we don't expect rates to get worse. I just came across a YouTube short from last October where I was like screaming at people. especially on the refinance side. Like,
Yeah.
if you like it, if it makes sense, lock it. I promise you, these rates will not stay this low forever. You need to lock it. And then,
Yeah.
like, holy moly,
Yeah.
going back,
you
those,
look like a genius right now.
well, I almost sent you that because I did look like a genius. But on the day to day, we come off the weekend, the 3-day weekend, and Tuesday, yesterday, we had a good day. We had 40 basis point improvement on rates. Everything that came in, lock it. Don't get greedy and think that maybe tomorrow will be better. Because today, Mike, as of the last time I checked, 75 basis points down on the day.
Yeah, the other way.
A day where lenders are repricing for the worse. And
well, it's because the Fed spoke. I mean, these are not even Fed speaking. This is Fed minutes, right? The Fed minutes basically says we got to get tighter. So yeah, you could kind of expect these things.
Yeah, and I think that, like, those of us that really, I don't know, like, I don't claim to be an expert more than Jerome Powell. Like, they have to tighten. They have to.
They just do.
And so that all points towards rates going up, to really simplify it for people. As they get more restrictive and do all the quantitative tightening, rates will go up. And so before they get any better, which some of us see that U-turn next year, 12 months out or whenever it is, it's going to get worse. Expect it to get worse. Lock with what you've got today, and don't go chasing some. Well, rates got a little bit better today. Maybe I'll ride it into.
I'll go to the casino table and roll the dice. Yeah,
right. Leave the gambling to Vegas.
Yeah. What is an average rate lock? Somebody's gonna. Is it 30 days? Is kind of the average rate lock?
Yeah, and then lenders have 45s and 60s and 90s and.
But it all comes with a cost.
Right. And it might be that. If you don't want to pay any points, let's say that the rate with no points is 5.25. If you lock on a 30-day, if you lock on a 60, it might be closer to 5.3. If you lock on a 90, sense. You might pay 5.5.
Okay, makes sense.
So you pay for that assurance, which I just looked at one that we're closing on July 19th, and we locked it on a 180-day maybe in the mid 4s.
Oh,
maybe it was only. It wasn't 180 days ago, because we would have got even better than that. Whatever it was, we did an extended lock at 4.5. A lot of lenders have changed, Mike, and they used to let you do that for free. So
they're not going to do that anymore.
Right. They all charge. At least most of the ones that I talk to, are charging up front for those extended rate locks now, because it costs them if they break it. So they're not going to let consumers lock away and break. But those are out there, and for somebody who's buying a new build, it doesn't always make sense to do a 180-day or a 360-day lock, but at least know that you're working with somebody who knows, give you. They
can at least tell you what's possible.
Right.
Yeah. The one thing I wanted to ask you as we wrap up video number one, I'm starting to look out to 2023. My crystal ball is as broken as everyone, but one of my 4 questions I wanted to ask you. One of the things that I could see that could lead to an extended crash in values, which I don't see right now in 2022, is if ARMs, right, 5-1, 7-1, 10-1s got into the 6s, which would probably mean 30 years at 8 or thereabouts.
Right.
Have you given that any thought? I know I just sprung that on you last minute, but have you seen ARMs? It usually is what, like a point and a half difference between 30-year and 5-1s?
Yeah, right now, when you're mid 5, mid 4, you're about 1 point in difference. And as you get higher, it might be a point and a half.
Okay.
It might be 6 and 7.5 or 6.5 and 8.
Right.
And I guess I'd love to hear your reasoning, is because if enough people write these ARMs now, they're going to be in trouble when they start to adjust? Or?
No, actually, it's simpler than that. So for a long time, I believe that the real estate market would be in danger at 6. But consumers always do what consumers do. And okay, I can't get approval at 6. I'll go get an ARM at 4 3/8. 4 3/8 is still a great loan, right? It's a great rate, and they can still qualify. So real estate won't take the haircut or slow down as much, because what we're seeing is people just naturally transition to ARMs. I think to really see real estate slow down because of affordability, the ARM has to be at 6 and the 30-year has to be at 8. Right. That's where this thing slows down. I originally thought it slowed down at 6 for 30-year money. It's not happening, or at least not as much, because more like 10% of loans are already ARMs now. Right. That changed overnight.
Yeah, I still think that a lot of those are jumbo, and at least from what I see in the first time buyer, entry level, conforming loans, not a ton of those.
Oh, good.
And, to give my 2 cents to it, I
Sure.
think that demand has fallen off a cliff, even on the purchase side, and we just haven't seen the data yet.
No, yeah, no, I clearly, I think like July 20th, I'm calling it on my channel, is going to be the day of the earthquake. And that is National Association of Realtors June reports. They're going to be bad. I've gotten Vegas data. I got Phoenix data a couple hours ago. I got New York data. They're all bad. They're all bad.
Yeah. And truth be told, like United Wholesale Mortgage, biggest wholesale lender in the country, a lot of purchase focused originators like myself, we're going to have good July and August because we're going to have people that are, jumping in, all of a sudden they can get their offers accepted. And so I think even like the data for the next quarter might not necessarily show all the true pain. Once all that stuff kind of settles, then Q4, Q1 of next year, then you might start to see like, oh wow, like there's a lot less demand on or than we anticipated. And stuff is sitting and piling up. I'm open to all the things that can happen now. I'm trying to keep my eyes wide open.
Yeah. Again, as an investor, this is the time to really only be doing great deals, no good deals. Do your homework, buy box, be patient. I think we got a couple of years of this. Matt, where can people reach out to you if they want to get pre-qualified or get a rate lock or any of those good things?
Sure. Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. We would love to answer questions, but one thing I'm getting more and more of lately, and also I'll reiterate it here, pre-qual doesn't mean anything. I'm not going to say you might qualify for this or that. If you want to know what type of programs are available and, hey, could I do 5% down conventional, those type of things, happy to answer that stuff all day. I don't want you out there shopping and looking for homes if you're not pre-approved. If you'd like to get pre-approved, we're more than happy to help. We pay for the credit report. We spend time and energy. We'll get you pre-approved and you'll be ready to go. If that's with us or with anybody else, it's the same advice. But we're not doing any type of napkin math and, hey, we think this might work, because it doesn't serve anybody.
It doesn't help anybody.
Go to greatmortgagebroker.com. We'll do it the right way.
Awesome. Thanks, buddy.